Let us see the next question. This question is provided to you in your module, and I have provided this question along with the answer to you. I just want to discuss with you that say what kind of working that say we are required to do over here. We are just discussing that say what kind of say the working that we can have. ABC company sells plumbing fixtures on the terms 2/10 net 30. So the credit period is 30 days. If customer is making payment within 10 days, customer will get 2% cash discount. Its financial statements over the last 3 years are as follows: 2020, 2021, 2022. We have been provided with the assets. In that, cash, debtors, stock and fixed asset. Then we have been provided with the liabilities. Creditors, outstanding expenses, short-term bank loan, long-term debt, equity share capital, reserves and surplus. Then we have been provided with the information: sales, cost of goods sold and net profit. Like that, so the information is given to us. Analyze the company's financial condition and performance over the last 3 years. Are there any problems? That is a question. So over here, this is what's a kind of information provided to us, and based on that, say we are required to do analysis. Now generally friends, generally these kind of questions are not asked in examination, wherein you will be provided with the open-ended information and you are required to decide that say which are the ratios to be calculated, and for that say what kind of say the comment that you have to pass. Over here you can see that say from the given information you have the sufficient that is information of the current assets, yes. Sufficient information for current liabilities, yes. So you can make the calculation of the current ratio. Stock information is there, so you can make the calculation of the quick ratio. You have been provided with the information about the balance sheet, so you can calculate all capital structure ratios. The capital structure ratios are debt equity ratio, total liabilities to net worth ratio, capital gearing ratio, proprietary ratio. Then you have been provided with the sales and you have been provided with the stock, so you can make the computation of debtors, so you can make the calculation of the debtors turnover ratio, creditors turnover ratio, stock turnover ratio, all these things that say you can calculate. Over here you can see that say the institute suggested answer I have provided. They have made the calculation of this too as a part of the liquidity ratio. This is average collection period. This is turnover ratio, indicating that what is the activity level ratio. That is, both of them are for activity level ratio. Then we have been provided with certain ratios with respect to the capital structure, that is total liabilities to net worth, long-term debt to total capitalization. Then this is profitability ratio. Asset turnover is, once again we understand that say the activity ratio. Return on asset is once again the profitability ratio. Like that, say you are required to make say these ratios. I would say that say this is only an illustrative example, and we can have the calculation of still more number of ratios, and based on that say we are required to pass comment. For example, the current ratio of the company is like it is increasing and then again it is decreasing. So the current ratio of the company has say seen an increase in 2021 and decline in 2022. Asset ratio has gone down, maybe because of the stock level has gone up. Average collection period increases, that is not a good sign. It is indicating that the time period in which we get the collection is getting delayed, and it is not a good sign. inventory turnover ratio is falling down, again it is not a good sign. That is the way we are required to pass the comment. GP ratio has substantially declined. From approximately 20%, it reduces to 13.2. Net profit ratio is again declining. That is not a good sign. That is the way we are required to say pass comment over here. What I want to tell you over here by that is you just go through this. There is nothing great over here in this question. I want to tell you that as a student, whenever this kind of question comes, I can say that over the last 10 years this kind of question has not come, but still they have provided in the module. So if at all this kind of question comes, then in that case from the different perspective you have to calculate the ratios. From the liquidity perspective there are 5 ratios: current ratio, liquidity ratio, then we have absolute cash ratio, cash position to total assets ratio, defense ratio. So from this 5 you can compute any 2. We have seen the capital structure ratios, we have seen activity ratios, we have seen profitability ratios. So you can just compute a few representative ratios, and with that you can pass comment. Write down a note for the answer. I am dictating a journal note for the answer. Write down a note. First point. In this question, we have to decide which ratios to be calculated for the purpose of analysis. Second, we should find certain representative ratios from each segment. Full stop. From return A, liquidity point of view, B, capital structure point of view, C, activity ratios, D, profitability ratios. Like that, so these are the ratios to be calculated. Third point, from liquidity point of view, A, current ratio, B, quick ratio, C, absolute cash ratio, D, cash position to total asset ratio, E, defense ratio. from profitability point of view, A. GP ratio, B. NP ratio, fifth, activity ratios. In that rundown, all turnover ratios and time period calculation are turnover ratios. Capital structure, in that debt equity, comma, capital gearing, comma, proprietary ratio and total liabilities to net worth ratio.